Eric Muadid, Muadid.com, with a weekend analysis for the weekend of August 29th and August 30th, 2015. Let's take a look at how markets closed on Friday. Pretty much an unchanged for the Dow, unchanged for the S&P 500. Nasdaq was up 0.32. We see that gold was up about 1%. Crude oil was up 6%, and we see that the VIX was pretty much unchanged after Friday's close. For the week, S&P 500 was surprisingly up 0.91%. For the week, the Dow managed to close up 1.1%. And for the week, we see that the Nasdaq closed up 2.6%. That's an amazing show after this major gap down on Monday morning. So let's take a look at the charts. We begin by taking a look at the Nasdaq weekly. I have to say that this right now, this line, the green line on the weekly for the Nasdaq, seems to be holding. And this line was support late 2012 off the lows here. It was support again here late last year in October when the market pulled back here and held. The market went on to new all-time highs. And now as of the close of Friday, that is holding. So we can see that very simply, if the market adds on to this support, that's going to indicate that we are going to be looking to move higher in price. And if we break below that, that's going to indicate that this is now a market that wants to go down with no chance of support like it did this past week. So if we are holding, that's good, which is what is going on. Otherwise, if we break that green line, could be trouble ahead for the market. If we go back on a weekly chart, now this is a weekly chart going back 2006. So we're talking about 9 years of weekly data. And I want to show you off the lows of 2009. So we can draw off the lows of 2009, this RSI movement here, this move in the RSI. In fact, let me draw that correctly. So hold on, let me show you what I'm trying to get at, because you'll see this on many of the other general market charts. There was a breakout here in 2009, which is off the lows here for a nice entry. As we know, the market went on to record a nice multi-year rally over the last couple years. Nice run here. And so if we draw a line off this level like that on the Nasdaq, on this weekly chart, you can see that it gives us nice lows over the past couple of years. Support here, uniform activity below the green line, back above it for nice support there. Double bottom support that held, support here in 2012 that held, this held here on the line, which was the lowest there in 2014. It held again late 2014 during this pullback, and now we seem to be showing support on the same line. So clearly, without adding too much information here, the more we build on this support, the more this market is going to recover, probably even to take out recent highs. I know that's fantastic to believe, but that's the case if the market can show support. Again, if we break below that green line of support, then this is going to be something different since 2009. This is where it's been holding since 2009. It seems to be holding this week. As long as it's holding, expect the market to move higher. If it breaks, it hasn't broken this green line, as you can see, throughout this period going back to 2009. So the weekly looks like it could show support. Otherwise, it could break if it can't hold that green line. If you take a look at the daily for the Nasdaq, you'll see that if you connect the top side of the recent daily RSI highs, the market is struggling as of right now to hold above this line. So there's some short-term resistance on a day-to-day basis. For this market to move higher, it needs to move above that line of resistance on the daily. If we take a look at the Dow weekly, we can see this 1% close for the week is actually meaningful, because if you take a look at the long-term weekly chart, again going back 2006, so 9 years of data, you can see that off the lows of 2009, the RSI did move above this level here. So this movement in the RSI, this breakout short term, began a nice move in the market, and the market would go on to record all-time highs. Of course, we all know that. So the market went on a nice run, We know that was a major buy signal, so we can use that line there for future reference. And as of right now, the market has used this once before, and it was during the lows of 2011. That held, and now we are back here. As of this past week's action, the market is showing support on the green line. So clearly, the more it adds on and builds on this support, the more this market is going to bounce and trend higher. But we have to be aware, because the line is clearly defined. If we break below that red line, which something it hasn't done since 2009, then that would suggest that this market has changed. For now, we ended the week with nice support. We have to assume that that support that took place this past week was for a reason, and that the market actually wants to bounce. So it needs to hold above that line. Otherwise, if it breaks below and stays below the green line, then now we are entering into a new phase, which would be a bearish phase. So even though the weeklies look good, you'll see that on the short-term time frame, for example, on the hourly for the Dow, it's back to test the top side of its recent highs on the hourly RSI. The highs there, that high and this high, the market is struggling to hold above that. So hour to hour, if the market is to move higher, it clearly needs to take out this recent line of resistance on the hourly. Otherwise, the more this is confirmed as resistance, the more we might get this nice retest of the lows of Monday. And the reason why I say that is because rarely do you see a market move higher without testing this type of negative RSI action. Suggests that more than likely there's going to be a retest of these lows, or at least at some point either to retest the lows and hold, or retest the lows and break. Why do I say that? Because whenever you see the RSI on the hourly or on any time frame, whenever you see the RSI trade below 30.90, you know that if it stays below 30.90 for a while, it suggests that it's going to have to test the lows that were made during this period. So my thinking is that more than likely it would make sense that if the weekly charts don't show support on the RSI on the weekly, so if the weekly RSI does not show support, we are going to have to test Monday's lows, maybe even break the lows that were recorded on Monday. If you take a look at the Dow 30-minute chart, clearly there's a line of resistance connecting RSI highs like that. We are struggling to hold above that line. So if this market wants to move higher, it has to take out that short-term resistance on the 30-minute chart for the Dow. It needs to break out above that. Otherwise, the more this is confirmed as resistance, the more it suggests to me that more than likely we are going to have to pull back, and probably that pullback, if this is confirmed as resistance, RSI is going to point down, prices are going to point down, and I think they're going to have to retest these lows here, would be my guess, or maybe these lows here during the middle of the week. So we'll see which way it goes, but a breakout is needed if the bulls want to take this market beyond the recent highs of Friday. If we take a look at Dow Transports, they also closed slightly higher for the week, which is good, up about 0.46% for the week. And actually, if you take a look at a long-term weekly chart, you can see that this could actually be showing signs of support. If you take the lows on the RSI going back 2008, you see that they connect very nicely with the lows of 2008, 2009, and 2011. And over the last couple of weeks, it's been bouncing on this line. So maybe even the Dow Transports are trying their best to hold support. If that support can hold, I think that can be good enough to start a new recovery leg higher. We also see that it is coming back to test the entry level of the 2009 lows. So draw a green line from there. So this was where the movement began off the lows here in 2009. We've used this green line area for support here during the lows of 2010. It held here in 2011, came close in 2012 during these lows, and in 2014 held during these lows, and now we seem to be holding that line. So if those two lines can hold, and again, let me draw those two lines again, simple lines, line connecting the lows on the weekly RSI, and also the line connecting the ideal entry point in 2009. If the market is holding above those two lines, then there's a bounce that is going to take place in the market higher. Unfortunately, if we break below that, then that would suggest that support has broken and we should expect lower prices. Not to be left behind, if you take a look at the S&P 500 weekly, this is again 9 years worth of weekly data. Take the lows of 09 and connect that to the lows of 2011. It should look something like that. You can see that the market is coming back to test that line of support. The more it holds, the more we bounce. We are also testing the ideal entry point of the lows of 2009, just like we've seen with the other markets, like that. And so as long as it is bouncing on the green line, just like it did in 2010 during the lows there, it held back above that line in 2011 and came close late last year, which was the lows here. If it can hold above this, expect the market to grind higher. And surprisingly, if that holds, maybe even to test recent highs. Again, I've been saying that that's dependent on whether it can hold. If it breaks, clearly you have to turn bearish or at least consider the downside. As we begin the new week, first order of business for the market to consider is whether it can break out above the hourly resistance on the S&P 500. You can see over the last day or so, it's been struggling to hold above that resistance line, connecting recent RSI highs on the hourly. We can also see similar type resistance on the 30-minute chart for the S&P 500. If you connect the tops like that, it seems to be struggling to hold above that. So the first order of business is whether it can move above that line of resistance. If it can see itself above the line, then we start the week with a nice bullish note. Otherwise, if we can't hold above that line, then maybe we start the coming week with a slight pullback because of resistance. So either we get a breakout above the blue line or we get resistance indicating the beginning of the week a little bit on the downside. Now, there's evidence that this could actually also be true on the daily for the S&P 500, because if you take a look at the daily on the RSI, there's a line here that connects recent RSI lows. So I'll draw it like that. So this blue line connects recent RSI lows on the S&P 500. And you can see that once we broke below that, it led to this major drop. So we broke below that about a week or so ago. And I think what could also be happening is that the market is coming back to test that line. If this is back test failure and the market shows resistance on the daily chart, we might have to point down. Again, I have to qualify this because I think the problem that I see in the market is that we spent a couple of days with the RSI trading below 30.90. And generally speaking, when you trade below 30.90 on the daily for a couple of days, then that suggests that you might have to come back and test the lows. Now, the test of the lows can hold and you bounce higher, or you can break and make fresh lows. So because of the time period we spent below 30.90, I suspect that we might have a good take at either testing these lows that were made on Monday or breaking below that, especially more so if this is confirmed as resistance. So if you see that the market has failed to move above this line here on the daily RSI, if you see resistance in the new week, that would indicate that we are trending lower on the RSI and prices more than likely will have to test recent lows. Let's take a look at Apple, and also we are looking at Apple from a 9-year weekly chart, and just want to show you why that this could also be bounce territory. You can see that if you connect the lows on the weekly RSI, these lows here, you see that they've come in contact this past week and held. That's very good support. So on the weekly, that looks good as long as that support is being respected by the market. That's very good weekly support. And we see that off the lows of 09, somewhere here, the market broke out on the RSI, and that breakout took it off the lows of 09, 08, and we went on a nice run. So we had a nice run after that support. We can see that. So we can use that information to draw a line from here, which is the green line. And you can see that during this period here, this line held for the most part. And after it held, the market went on another nice run as far as Apple is concerned here for a couple of years. And so we see that it held on the same line this past week, suggesting that for now, the stock is showing support and could actually be moving higher in the coming weeks. Obviously, if we break below those two lines, then Apple is also in trouble. But we have to go with what we see, and what we see as we ended the week is that this ended on a nice support right there, and that support to me is good enough to play this to the upside for now. So you have to play what you see, which is bounce, and so the bounce suggests that it wants to move higher, suggesting the market also has that opportunity. So let's conclude this video by taking a look at the Dow monthly, which is the most bearish. And I say it's the most bearish because the Dow is pushing its monthly RSI this month to 3-year lows, which might explain the sudden or the recent bearish tone in the market. It broke to 3-year lows this past month, which is not a good sign, has not been a good sign. And the MACD is also pushed to fresh 3-year lows. So that's the biggest bearish argument that I can see in the market, that the more this is moving lower, the more this market trends lower. This is a major sell signal and might explain the big drop we had recently. But there is something I need to explain here. You see this big drop this past week or in past month is because we are moving below 50 on the monthly chart. As you move below 50 on any time frame or above it, you get a big swing in price. And because this month we were moving below 50, the market did have that big drop for the month. Now, what happens when it moves back above 50 in the coming month or months? That might suggest that we might get a strong, if that happens, if the market can bounce back above 50 in the coming month or months, that would suggest a strong month to the upside. As an illustration, take a look at the monthly chart going back to about 2007, 2006 on the monthly for the Dow. A couple of points here. It has held above the 50. Ever since it moved above 50 on the monthly here, the market has defended 50 for the most part. So since 09, it held and bounced back above 50 here, double bottom support. During these lows, market moved higher since then. It held here with a V-type recovery back above 50, which was the lows of 2011, and the market went on a good run. So what I'm getting at here is we have to be aware that if the market can bounce back above 50 or show support at the 50 level, then this market could actually be looking to bounce in the coming months. So this is where the market can make a stand. If it can hold and bounce off the 50 level, it has a chance of moving higher. Otherwise, the more it stays below 50, the more we are entering a new phase. To put it another way, since 2009, so since 2009, the market has been moving higher steadily over the last 4 or 5 years. All right. And we've been holding above 50, as you can see. If we are going to go into a bearish phase, then it's obvious that we need to start trading below that 50 level. It's something we haven't done yet, so we have to be aware that this market could easily bounce based on how the monthly RSI is behaving. Also, there's one other argument here. If you take the monthly closing low here in I think March or February 2009, take the monthly closing low of 2011, draw a straight line, you can see that we are trading exactly on that line. So we haven't really broken that trend line. So that's another argument that the price has yet to break on a monthly closing basis based on the channel. So yes, that could break in the coming months, all right? But we haven't broken yet. So we have to be careful here. It's an inflection point, I think. We hold the 50 and this market is safe, all right? So let's do that again one more time. One more time. We hold above 50 here, the market's okay. We break below it and trade below 50 in this area. Now we enter bearish phase. Eric Moada, themoada.com. Good luck, peace, and blessings. Woo! EACS.